Thank you for joining Jennifer Shelton Associates in our 2019 webinar Wednesday series. We're coming to you live from downtown Washington, D.C. Our webinars are every Wednesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are also on our website and on our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email him directly with the contact information you'll see on the last slide. This is just a little bit about us. We are a Washington, D.C.-based firm and provide services for federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us there. We do offer advertising in our newsletter, so you can reach out to this email if you'd like more information on that. All right, our speaker today is Antoine. He's going to be covering DCAA Basics. Thank you for joining us. I'm going to go ahead and hand it over to you.
Thank you very much, Mallory. Good afternoon, ladies and gentlemen. My name is Antoine Ndenmatten. I'm the Executive Director of Fiducial Outsourcing Services. We are a team specialized in outsourcing of CFO services to governmental contractors in the DMV area. We'll come back to our service at the end of the presentation. We were also known actually with our previous name, which was actually Business-Wide. We are a subsidiary of the Fiducial Group, leading advisor and service provider to business and individuals on both sides of the Atlantic. I would like to thank you, Jennifer Strauss and her team, to give me the opportunity to introduce you to the feared DCA environment. We'll start with some basics, and I hope that experienced people will bear with me for the first time. Okay, first slide, please. So, what is DCA? DCA is the acronym for Defense Contract Audit Agency. This agency is part of the DoD, the Department of Defense. They have developed such an experience that they may be doing actually work for other agencies. DCA work with different set of rules, like the DFARS, the Federal Acquisition Regulation, also the DFARS, the Defense FAR, and the CAS, the Cost Accounting Standards, and even the GAGAs, which are the General Accepted Government Auditing Standards. That makes the search quite challenging because from time to time you need to link to a specific part of the documentation, but all the answer can be found at the end, and the elements are usually quite clear. But this actually can make the search of information quite challenging. So next slide, please. Let's go first actually to the introduction. You will ask yourself, but when will I meet them? Well, most of the time you have a new contract with the government, you will undergo a pre-audit done by the DCAA. This pre-audit is not with the DCAA being present, but it's a form that will have to be filled by you or advisor and sent to the DCAA. On the base of the answer you put on that form, they will decide if an audit is required or additional questions are needed. That's for the first part. But then you need actually to expect that when the delivery of the contract has begun, you may get a field audit from the DCAA. For some type of contract, and I will come back to that later on, chances are pretty low, but still exist. It's still possible that they come. For other form of contract, this will happen on a regular basis. And obviously, the amount of the contract you are serving will have an impact. So that's when you will you should expect actually to encounter the DCAA. Next slide, please. So what you need actually at that time is to determine actually what they will not do. And this is actually a little bit difficult to understand, but they will not preemptively audit your processes, systems, books, and so on. They will not give you a good to go stamp. So when we talk about the DCAA compliant tag, this does not really exist. It's only tested live, which I mean when they are coming to audit you. I know it's a little bit stressful because we know all of us that there is consequences if you do not abide by the DCAA rules. But it's something that you can be prepared to do and to have. So before jumping to the expectation of the DCAA, let's look at a simplified view of the type of contracts, and because that actually has an impact on the way an audit could happen. Next slide, please. So there are three main types of contracts that the government will handle with you. So the first one is a very simple fixed price model. In that case, you just deliver your goods and services at a price that has been actually negotiated in advance. This is a very simple form of contract, and it does usually do not carry a lot of scrutiny from the DCAA, but it can still, and you need to keep that in mind. The second type of contract has a different flavor. There, you will charge the government on the base of a price that you had fixed beforehand, but for a number of units, or more specifically a number of halls, that you cannot determine before the delivery has started. So you will need to keep track of all the halls spent on each project. This is what is called the DCAA, the time and material. Can you go down because you went back, Mallory? You went, okay, thank you. So the third type of contract that you have is a cost reimbursement. This is not usual for small contractors. It's more for large providers. Think of like you were building a new type of aircraft carrier. You don't know all the costs beforehand. So in that case, to simplify the way the contract is a negotiation on the margin to be applied to all the costs. And those costs will be reimbursed by the government, but they need to be acceptable by the government. So you will need to accumulate and to properly register all your costs into cost pools and to allocate them into what we call a final cost objective. And there is a specific the webinar, I think in 1 hour, which deal exactly with that topic. So I will not actually enter that. So now that we have set the scene of these three type of main contract, let's point at the expectation the DCAA will have and make sure that you can be as compliant as you can be. Next slide, please. So the first thing the DCAA will look at when they come actually and audit you is they will ask for your written procedures. These are really needed, and they should cover all your main processes from accounting to billing, timekeeping, travel, labor, handling, and etc. In some very complex cases, also the estimation, when you have a cost plus contract, the way you estimate and the method you apply is also very important for you. So writing these procedures is key and has to be done right at the beginning of your process. Templates exist, you could use them, and they include actually all the FAR and CAS elements, but they may be actually need to be tweaked to your business model. What is very important is that then they need to be published within your company, and they also have to be acknowledged by the relevant person. So not only you write them, but you publish them, and people have read them and live by them. And how do you cross-check? Obviously, you do periodic controls to make sure that they are dutifully applied. It may seem actually silly, but dealing with the government does not give you a lot of latitude on that topic. Therefore, you will need to strictly abide by their rules and by specifically your own rules. So the DCAA auditor, when he comes, he will actually make sure that these policies exist, they are implemented, they are cross-checked, and they are making sense. And this will be actually for you a moment of truth because we all want actually to be fully prepared for that. Next slide, please. So the second part is the timekeeping system. We all know that maintaining a proper timekeeping system is quite tough. So this is known as a place where the DCAA could have actually what one could describe as the best bang for the buck. And you for sure understand that it attracts a lot of scrutiny. So you should note that this is valid already for a contract of the second type, which is the time and material or the labor hour contract. So in a nutshell, you must have your staff entering all the hours spent, and then you will allocate them to the correct project. And this includes actually vacation, sickness, but especially projects that are not linked to a government contract. And understand here that the goal is pretty simple. All the hours not spent on a government project will be attached the same G&A and overhead rate than a government project. Therefore, a portion of your G&A and overhead will not be paid by the government, and DCAA will therefore make sure that you have all your hours registered so they can actually reduce the cost. The next very important point is that the entry needs to be done by the employee himself. I know there are some exceptions to that rules, but they are very few. This is called the segregation of duty, and it's where the responsibility does not rely only on the company, but also on the individual. A supervisor will then have to approve each and every entry of hours. And then, if a correction has to be made, because that's happened, you can have an error of entry, you will have actually to go through the full process, and you will need actually to have what we call a verifiable audit trail for the string of transactions that will happen. By that I mean that a log of all the different entries and then approval of those changes will be needed. And I'm talking here about an electronic system, and most of the companies are using that. But a manual system is still possible, but we mostly actually use electronic system. So you will have to secure that there is a strict adherence to these rules and any other rules that you would have actually integrated into your policy. And for that, you will need to regularly remind or even retrain your employees on these rules. The DCAA will expect you also that you do some tests on a regular basis to secure that your rules are abided to. And finally, unfortunately, they may do actually, the DCAA may come and do a spot audit unannounced. And this is called actually the floor checks audit, and they are doing that. Next slide, please. So the last element is what we call the segregation of cost, and that is very important for you to be able to differentiate. So first, you will need to distinguish between direct cost and indirect cost. So let's take a step back. The direct costs are the costs that you can directly link to a project. The project is what we call in our jargon the final cost objective. And you could actually think of a particular piece that you sell to the government. For example, I don't know, a nose tire for a fighter aircraft. This goes directly into a project. On the other hand, indirect costs cannot be allocated directly to a final cost objective, the fighter jet, as described before. For example, the salary of the CFO. And for that, you will need actually to segregate those costs and add them into buckets that we call pools, and have the ability to accumulate this cost into cost pools. And don't be afraid, most of the financial systems are able to do that. And then a distribution key will have to be determined for each pool, and finally this cost will be allocated to the final cost objectives. Once again, there is actually in 1 hour a webinar on this element. But you will see actually that this allocation process is quite complex. It has two foot. By foot, I mean it's a technical accounting term that means to add up. And a well-structured financial system will support you there. That's not a problem at all. But that's something that you really want to count. You will have also to segregate between allowable costs and non-allowable costs. A usual example is an entertainment cost or even penalties. The government does not pay for penalties and cannot include that into indirect G&A or indirect overhead. So this cost will have to be registered under a different bucket and segregate. And that's very important because you don't want to have that into your books when you present your numbers. Next slide, please. So that's, yep. One more slide, please. Okay. Financial systems requirements. Here we talk mostly about cost reimbursement contract. The question may already be asked for other type of contracts. There is a set of 10 criteria set by the DFARS. And here, some systems have been built up with the intent to be from scratch DCAA compliant. That gives you a pretty easy entry into the DCAA business, but obviously their cost is adapted to that status. You have to take into account that most systems can be structured in such a way they will fit actually with the DCAA requirement. You will need some additional piece of software to integrate the timesheet systems and also do the calculation of indirect cost pools and what we call the IC. It's possible to do, and you usually actually have to balance between the additional costs you would have for an audit with the additional costs you would have on a recurring bigger system that do that all for you. So I think it's nearly actually time to conclude. Let's go to my next slide. How can fiducial outsourcing services support you? Well, we offer DCAA compliant bookkeeping, and our offer is structured in a way that we can grow with you, so you don't have to invest into a full person while you need only some hours of work. And we can obviously incrementally grow with you. We are also providing payroll services. You can prepare your taxes, make sure you are planning properly your payments over the year, and finally support you in various control domains and establishing a budget and even actually going to the merger and acquisition part. So that's what we offer as service. Feel free to contact me anytime. It will be a pleasure to talk to you, and I hope this very simple and very quick presentation on DCAA basics will help you. Thank you very much.
Yeah, thank you for joining us today. If you have any questions, please feel free to reach out by email or phone with the information shown on your screen. And this concludes the webinar. Thank you.